Hello, everyone. It does appear that we do have a character change in the stock market. Following the excellent reversal yesterday on very strong volume, what you wanted to see was immediate follow through, especially to action like that. And today we got the opposite. We had an attempt to have an amazing session with the early morning gap down in futures. I tell you what, if we would have done that and then rallied and closed above the high of the day of 7.7, my God, I'd say that, man, we just washed out hard and we're ready to run. But following today's session, no way. Above average volume on the sell off on the NASDAQ. And even though the NYSE was closed for most of the day before it began trading, so volume was below average, you can be sure that it would have been above average. And more importantly, the S&P 500 is closing below the 200-day moving average. So even though it's not below the low a day of 7.7, that 200-day moving average break, that's good enough to switch that model into a sell signal. So the S&P 500 is now operating under a sell signal, and that now matches the New York Stock Exchange, Dow Jones. I'm not going to be able Dow Jones Transportation Average and Dow Jones Industrial Average. The Dow Jones Transportation Average continues to just eat shit as it is hitting new 2015 lows and just doesn't look like it wants to bounce anytime soon. My favorite oscillator, of course, is the bottom one. You see on the screen the stochastics. You can see that Dow Jones Transportation Average is getting pretty near oversold. Same with the Dow Jones Industrial Average, NYSE, and S&P 500. However, until you start to see that blue line hook up, yeah, this thing can stay oversold and get more oversold. So there's no reason to try to even bottom call it. But the good news is that the Russell 2000 NASDAQ has worked off overbought condition. So if we are going to bounce, we're at least set up to bounce successfully on that oscillator, but it's still too early to tell. And with the newest switch sell signal in the S&P 500, that leaves just the NASDAQ 100, and the Russell 2000 under neutral signals. They close below the 7.7 low a day. I don't think we're going to need to wait for the Russell 2000 to break because there's enough weak action out there that's going to tell us that the market is done. I had quite a few sell signals, but I was knocked out of all of them already. ATRC 100%. IVC 100%, ZIOP 100%, and CLVS 100%. I've been knocked out of all of these already completely due to tight stops. It pays off now, but those were the 100% sells, 50% sells, HDS, Tile. Remember, use the low a day of today's signal to get out of it unless you want to just go ahead and just get out at the open. That's up to you, but SIGM, Blue, INTL, CRIS, the new long, another new long, not working immediately. It hasn't failed on an end-of-day basis, but intraday, it closed below it moved below 309, hitting 308. That triggered me out of half of it. But just the fact that it closed below the low a day of the signal date here of the 7th, that's a no good. So that's at least a 50% sell. But our new longs continue to act terrible. But I just already listed or just showed you all the sells. I left one out, Tesla. Tesla's closing below 20-day moving average, not shown on above average volume, so that's a 50% sell. But if you use the low days of the 50% sells and we gap up tomorrow morning and rally, you won't be knocked out, and we'll continue to be pretty healthy long the overall market. Some other stocks you got to watch the sell stops on. HLTH, EGRX is looking weak. CBPO, our long-term winner. SWKS, our long-term winner. Jack, our new long. Siny, which is really Sienna Soft Corporation, but I mean, things just aren't looking that good out there, so tighten those stops. Tonight, I'm going to be watching some TV shows after another surf session, and I'll be spending an hour to 2 hours going over my stops very meticulously. I do not want to see any gain turn into a moderate-sized loss. I'd like to keep all losses extremely tiny, preferably leaving most of these stocks that haven't produced many gains break even if the market continues to break down. Now, despite all this, surprisingly, there were actually 2 stocks that I flagged. PGTI is coiling. Actually, 3. Wing, IPO Wing. Keep an eye on this one. This one still might have significant momentum. It seems to be that it's not going to be a huge percentage mover, but it's the most bullish IPO chart I can see out there. And then PGTI is a CanSum quality lower price stock that's also in my 5 days BOP Max Green scan and Green BOP for 20 days scan. So it's very rare, especially in this market, for a stock to show up in both scans, and it's in both of the BOP scans. can some quality, and it's coiling here. So we're going to be looking for a breakout or pocket pivot point signal, and I'll go ahead and go long this stock if it keeps its max green bop and it keeps that tight price pattern. But BLKB, which I got shaken out of yesterday, put it back on this morning since the shakeout and the chart looks great, is producing an add signal. But following the S&P 500 sell signal, I now regret slightly increasing the size of EW and Jack. The long position was probably about 2.25% of the capital of each because I went under the 2.5 and I went slightly over the 2, and I tried to find a middle ground. So it wasn't quite 2.5% of the account capital in both of these, but I now regret increasing the size. But yesterday's bounce was beautiful, so you had to, I guess, if you're me. I mean, I'm not risking much if I'm wrong on these, but EW and Jack, they're not performing correctly, and CRIS and RDHL, the other two spec longs, are not performing correctly, so that's all I need to know. So BLKB is a 0.5% add signal. 50% of that add signal sell stop has to go below 57.01 now, and the other half goes below 56.09. I cannot let it all go all the way back. Well, 56.09 is now the new low, so I guess it's fine. So I can let it go all the way back to its lowest point in the support. But most new long signals, if we do go long in this market, we're going to be using the signal date slow day. But this is a beautiful chart, so I'll use half below 57.01 and half below 56.09, so 0.5% there. And the only real new signal is a short in the biotechs. Biotechs don't look done yet, but the BIS is giving me an inverse ETF long signal. It's been trying to hammer out a bottom for quite a while since March. It's starting to round up again, and now we're getting a fresh pocket pivot point signal on a surge in volume and a surge in bop to green bop. If we're wrong, you can use either half below today's low a day and then the other half below 27.64, or if you're extremely brave on the position, you could even slice it up into thirds. 28.41 for one sell stop, 27.64 for the other sell stop, and then really, if you think this market's really screwed and it might get volatile, you can go and use 26.53 as a final sell stop. Tech S now, the final sell stop, since now it is working and is broken out to new highs, is now going to be 40.86. I won't be waiting for it to go back to 37.58. I mean, excuse me, 39.07. I won't be waiting for it to go back to 37.58. 39.07 will now be my final sell stop on that position. But Texas is working. I now regret not going 5% in the signal instead of only doing 2.5%. Hindsight investing 2020. Anyways, though, it's getting ugly out there. You can see via yin and yang, China is absolutely just ugly in free fall mode. Volume's huge, could be getting a little overextended on the short term, but this thing could easily keep on going down. Market looks rough here, everyone. Be careful.